Hey everyone, in this video we're going to be going over Disney stock, its streaming thesis that I have. This is an update to a video I did in about July, I believe, where I went over Disney's streaming thesis and I used numbers that were up to date back then, but now we have some new numbers and I figured I'd just update this video, give you a more recent look at the most recent numbers and how projections may have changed slightly. I increased content budgets, things like that. So before we get into it, if you could smash the like button, it really helps the YouTube algorithm. And if you're not subscribed to the channel, definitely subscribe. So let's get going. This is a streaming thesis-driven valuation, so to be clear, Disney's obviously a huge entertainment company, and we could spend a bunch of hours going over the many businesses they operate and how each could evolve over time, but for this video specifically, I'm just going to stick to streaming. So we're going to go over the streaming business, we're going to make a couple assumptions about the rest of the business, which I'll get into detail later, but this is not going to be a deep dive on their cruises, hotels, anything like that. Now we're going to look at direct-to-consumer revenue growth. Now these numbers are in the billions. We're starting with Q1 2020. We're not going before that because that is when Disney Plus basically started, and it also be anything before that lumps the direct-to-consumer revenue with international revenue, so it's pretty hard to get the accurate numbers to reflect along these numbers. So starting in Q1 of 2020, they did $2 billion in revenue for that quarter. It has consistently went up every single quarter, even as maybe ARPU for Disney Plus may have gone down, etc. As a whole, their direct-to-consumer revenue has gone up every single quarter and is now sitting around $4.5 billion for the most recent quarter in Q4 2021. We then look at the subscriber count. So in Q1 of 2020, Disney Plus had 26.5 million subscribers, Hulu had 30.4 million subscribers, ESPN Plus had 6.6 million subscribers. If you add them all together, Disney as a whole had 63.5 million subscribers. By Q4 2021, Disney Plus had 118.1 million subscribers, Hulu at 43.8 million subscribers, ESPN Plus at 17.1 million subscribers, and as a whole, the Disney company was sitting around 179 million subscribers. Then we look at ARPU, which is average revenue per user. In the beginning at Q1 2020, Disney Plus's ARPU was $5.56, ESPN Plus was at $4.44, Hulu SVOD, so not including the live TV, was $13.15, and with live TV, it was $59.47. Well, if we fast forward to the most recent earnings, Q4 2021, Disney Plus has dropped from $5.56 to $4.12. ESPN Plus has went up from $4.44 to $4.74. Hulu SVOD dropped from $13.15 to $12.75. And Hulu Live TV with SVOD went from $59.47 up to $84.89. So we do have some increases, some decreases, but the honest truth is the ARPU is not the priority today for Disney, not at all. What is important to Disney is getting scale, and getting scale means offering things at a very cheap price, and once they've got the scale they want, they can then raise prices yearly. And this is a global product, so ARPU is obviously affected by places like India, where Disney Plus is extremely popular due to it being paired with Hotstar and their ties to the IPL. And the Indian population is 1.36 billion people and growing. So it's important that they do offer these low prices. They become the dominant leader for streaming service in India. I think that is what they're going to be. I actually think they're doing better than Netflix because of their sports rights. But I think their content is loved by everyone. So I'm okay with a low ARPU in India, lowering the average ARPU as a whole, because we need the scale. And we're going to get into scale a little later. So getting back to the fact that they start with the lower ARPU and then get it higher, we can look at Disney's theme parks as kind of a roadmap for what they may do in streaming. In the Disney theme parks, they basically raise the tickets to get into the park because a day pass has gone up every single year since they basically came out with Disneyland. So we have a little chart I'm going to show you, and before we do, just to get an idea where Netflix is charging, Netflix charges $17.99 right now for a premium. In cable TV, it costs $65 plus a month. So, these prices of like $4, $5 ARPU for Disney Plus, it's just to get scale. It is not what the end result is for a streaming service. The one-day ticket cost to Disneyland in 1971 was $3.50. In 2013, it was $95. Today, it costs somewhere between $159 and $209 for a single day pass, depending on the day. So it is safe to say that people will pay up for Disney. They've been doing it. Disney is a master at just raising their prices year over year and keeping their demand. And then let's look at paid TV subscribers to get an idea of just like linear networks. There's over a billion paid TV subscribers worldwide. Now, this relies on infrastructure. So just in its very nature, it is going to be easier to have more users when using the internet. And much of the world still doesn't have access to internet. And there's projects like Starlink that plan to give the world affordable internet. And that will expand the market at a rapid pace as well. So basically, we know that as far as internet, there's more than a billion people than the linear networks that you can basically reach that I think will be subscribing to streaming services as they fully expand and become the main source of enjoying entertainment for movies, film, TV, things like that. The world population is almost 8 billion people and growing. So we know that, there's lots of people in the world. There's a lot of people using internet. Just to get an idea of how many people are on the internet doing things, just, some people might doubt, how many billions of those people actually could subscribe to a streaming service. Well, I'd say, if you can be using Facebook, you probably can subscribe to a streaming service, depending on what you can afford. But for Facebook monthly active users, there's almost 3 billion people that are Facebook monthly active users, 2.91 billion people. And this number every quarter has grown for Facebook. And obviously, as you can see, only 261 million people of this 2.91 billion people come from the US and Canada. So being a global and having full scale, being a global product is extremely important when you want to be talking about reaching a billion people. And I don't think it's a stretch to say that eventually the dominant streaming platform will have a billion plus subscribers. It may be a decade away. But that's why I'm a long-term investor and with long-term thesis-driven investments. So we're going to give you a couple scenarios with a billion subscribers or less, just to give you some ideas of how this can turn out. Ultimately, I do believe consumers are going to have somewhere between 2 to 4 subscriptions for entertainment, with the top 2 being the most dominant players. And I believe each of those 2 will probably end up with at least a billion subscribers or somewhere around that mark. And I believe those 2 to be Disney and Netflix. I think Disney amongst Hulu, Disney Plus, ESPN Plus, Star, Hotstar, their offerings will be one of them. And I believe Netflix will be the other. I think there will be other successful streaming companies, but I believe these 2 to be the dominant that actually have a chance to hit a billion plus subscribers. Now let's run the numbers. So first, we're going to start with a billion subscribers, and let's just assume that the ARPU is only $10 a month. I believe it's easily going to be at least $25 plus a month by then, because we're talking about something that could be a decade away, even if it's in 2030. So $10 billion a month, at $10 a month, a billion users, that's $120 billion a year in revenue that they would be receiving. Now, to be extra conservative, I want to put a very high content budget. So I'm saying a $40 billion content budget. Basically, recently we saw Disney say they're going to spend $33 billion on content in 2022, but you have to keep in mind that includes sports rights. And to be honest, I don't believe you need sports rights to hit this billion plus number I'm talking about as far as general entertainment. But including it in, I think $40 billion a year is more than enough. You have to understand an Avengers movie costs like $250 to $300 million. You can be releasing massive blockbusters every 2 weeks and not be getting close to $40 billion. So you take the $40 billion on content budget, you subtract it from the $120 billion they'd have a year in revenue, and you're left with a gross profit of $80 billion before expenses, operational expenses for the company to run, etc. So from here, we take a little look back to see how profitable was Disney before Disney Plus. Well, in 2018, they had $10 billion in free cash flow. In 2019, they had $13.5 billion in net income. And this is all before Disney Plus existed. What this tells us is that Disney paid for its operations, plus it made $10 billion in profits plus before Disney Plus existed off of its media networks, its parks, its hotels, its cruise lines, all of that stuff combined. They were able to pay for all their operations and still be a very profitable company without streaming in the mix. And I know I said in the beginning this isn't going to be about any of the other parts of the business, but the only thing I will add is the rest of their businesses like parks, hotels, cruises, these things will continue to grow revenue and profits for many years to come. A quick example would be The Disney Cruise Line currently operates 4 ships, but there's 3 new ships that are being built and are going to be sailing, one coming this year in 2022, the Disney Wish, another coming out in 2023, and another in 2025, almost doubling the amount of ships that will exist for Disney Cruise Line. So all of these businesses are going to continue to grow and are going to continue to add more and more profits to the bottom line. But what we want to assume for this streaming thesis driven valuation is something really simple here, is that everything outside of streaming, the parks, the hotels, the cruises, the networks, licensing, merchandise, whatever, etc., it will not add a dollar to profits. The only thing we're going to assume is the profits it makes is just going to cover the cost of Disney to operate. All the, rent it has to pay, all of the salaries, everything that it needs to pay to be operational, to allow that $80 billion in gross profits from the streaming to just drop to the bottom line because all operations are paid from the profits of the rest of the business. Now, it's a very simplistic way to look at it, but the rest of the business pays for the operations of Disney as a whole and has a bunch of profit on top of it. So if you take that billion users, $10 a month, you get $120 billion a year in revenue, $40 billion in content cost, leaves $80 billion left. The rest of the company pays for all the operational costs. So that $80 billion just drops to the bottom line. You throw a P of 20 on it, so 20 times those earnings. You have a market cap of $1.6 trillion. The current market cap is $275 billion. So this is why I'm saying with scale, the streaming thesis for Disney is the most powerful thesis to add a massive amount of market cap if they succeed in scale. And if you look, you get the same valuation if they don't hit 1 billion users. What if they only hit 500 million subscribers? Well, if you had 500 million subscribers, but they were paying you $20 a month, which I still think is cheap, for the long-term goal of what they're going to be charging monthly, you'd still get the same number. 500 million at $20 a month is the same as 1 billion members paying $10 a month. So half the subscriber count, double the ARPU. Either way, streaming is a disrupting force. It will add trillions of dollars in market cap over the next decade, I believe, to multiple companies as a whole when you add it all together. And I believe it's possible to add for either Netflix or Disney. I'm more bullish on Disney because of the rest of the businesses being also accretive. Now, the alternative valuation I've looked at is like, let's just say they had 250 million subscribers, but with $50 a month. Now, I know that seems very high, but keep in mind, cable TV costs more than that today, let alone in 2030. And streaming is a superior product. It's watch what you want, when you want it, where you want it. That is much better than linear television. And you pay $65 a month for linear television now. So if we do the math, 250 million subscribers paying $50 a month gives you $150 billion a year. $40 billion of content cost would give you $110 billion of gross profits. Since the rest of the company, we're assuming, pays for the operational expenses with those profits, you throw the PE of 20 on $110 billion, you have a $2.2 trillion market cap. So you could see how impressive these numbers can get. Now, I wanted to give us a bear case too to see what it could look like. I think in a worst case scenario, bear case situation, they're going to have at least 250 million subscribers. They already have almost 200 million subscribers as of now. So in a decade from now, 250 million, paying you about $20 a month on average revenue per user. That's 60 billion a year. Now, I can't imagine them spending more than 30 billion if they're not going to be at a much higher number than 250 million subscribers. But let's just say $30 billion of content cost. You'd be left with $30 billion of gross profit. And if the rest of the company's parks, everything else is paying for operational expenses but not adding to the profit, then that $30 billion with a PE of 20 would give you a $600 billion market cap. The market cap today is at $275 billion. So clearly, even in a bear case, I really think streaming has the ability to at least double the market cap of Disney, if not much more. So this was a thesis-driven valuation. It is important to understand that thesis-driven valuations can score huge returns if they're correct, but because they rely heavily on things that have not yet happened, you have to keep track of the progress. You have to be ready to adapt if things start to change. I'd love to know what you think about these assumptions in the comments. Let me know what assumptions you'd make. Do you think Disney will be a top leading streaming platform? Where do you think the numbers will look like in 2030? I'd love to know. If you made it to the end of the video, please smash the like button. And if you haven't subscribed to the channel, definitely subscribe. Until next time.